Have you ever wondered why, after learning a new trading strategy, it will work for some time and then stop completely? Why, it's because we're missing some components they don't share with us. But guess what? AI can help us solve that. I'm a money engineer, and as a software engineer with a master's in machine learning, I've helped hundreds of traders pass challenges and finally getting payouts using AI and data science to optimize their trading strategy. And today I'll show you exactly what are those components you're missing. I'll go over today's strategy and show you how to correctly use the JadeCap strategy and how artificial intelligence and data science will help you make the strategy work consistently. Welcome to the series where in the coming weeks, I will take popular trading strategies on YouTube and make them even better using AI. So if you're interested in following us in this journey, make sure to subscribe and leave a like. So what is this component I'm missing? Well, in machine learning, there's a component that is at the very basis of almost every neural networks and other machine learning systems. Without them, we could never create all these big AI models you're seeing everywhere. And we'll use this exact same component to optimize JadeCap's strategy and make it more consistent. But first, let's quickly go over what is this strategy. Alright, so let's just go over the strategy. And of course, if you want the complete details and all his example, I really suggest you watch his own video so you can have all of it, but I'll just give you a quick summary. So his strategy, he showed it on Nasdaq, but I think it could also be used on ES, which is the S&P 500. And he's using the Asian session and the London session to have a bias for the New York session. He's also using some higher time frame analysis, but let's just focus on those two sessions to be able to have a trade idea during the New York session. So the Asian session in his video is from 8 p.m. to 12 a.m., which is New York time. So you can see here 8 p.m. to 12 a.m. And then he's also using the London session, which is from 2 a.m. to 5 a.m. So the way he's using those two is that he's saying that, let's say I have a bullish bias. I'm looking for a sweep of the low of those two sessions to have then a move higher. So you can see here that we both took out the low of the Asian session. This was done during the London session. And we also took out the low of the London session during the London lunchtime. So what's nice with this trade idea, and by the way, all the examples I will show you today are just taken from last week because I don't want to just cherry pick. I actually want real data for my channel, and I think this is what you should do too. I could cherry pick something 5 years ago, but I want to show examples which are very recent. And we can also see here this liquidity point. So this is the Asian high. And then we also have a London high. Those 2 points are very nice target points we can use for a trade idea. So what he's saying is that now we need to wait for around 9 a.m. to start doing your analysis. So we just did that. We saw that we took out those two lows and then wait for the 9:30 open of the equity market to be able to find a trade idea. So what we'll be waiting for is a breakout structure and a fair value gap. So he said that you can use this on the 5-minute or on the 15-minute. I was looking at his video and all the examples were taken on the 5 minutes, but that's still something that we need to keep in mind. All right, so let's just wait for the 9:30 open. So we just got the open and we can see here a fair value gap. So technically what we could do is then put the limit order right there. And he said to use the second candle, the low of the second candle for the stop loss with the stop right there. And just go with the 1 to 2. He said 1 to 2 minimum. So I'll just add that. So that could be your trade idea. But I would cancel this trade in case we take our target first, because there is no point in staying with this trade idea if the target is already met. So let's just see how it goes. All right. So this day we just missed this trade because we already went to our target, which were also close to the yesterday's high. So on this day, nothing. Let's just wait for the next day. And then on the next day, we can do the same thing. We can see that the low of the Asian range was taken, but the high was still there. So that's a nice target we can use. And same thing for the London session. The high is still intact. We personally use a lot of those levels in the group, so that's very important. All right, so once again, we're near 9 a.m. You can do your analysis. We saw that we've taken those two lows, and then we're looking for a bullish move to then take out those two highs. Is it 9:30? Not yet. All right, so nice move. We filled up this fair value gap and we started moving higher. No fair value gap yet. Nice. So there's one right there. And what I love about this one is that we didn't take out the London high yet. So that's very nice. I'll just put my order right there. Stop below this low. And then we can just go for a 122. Just like that. You could also, of course, go and take out this high, but that's something you need to study for yourself. And I actually shared in my last video a Google sheet that will do everything automatically for you. So you can go and check out this video. Let's see. So we got the execution. The entire fair value gap was filled up and then we went higher. Let's just go on the 15 minute if we had also something there. So on the 15 minute, we also had this fair value gap, but we're just taking all of our trades on the 5 minute, but that's something I would still study in my journal. And then right to target. So that's a beautiful trade right there. So I just showed you two examples. What we will do now is that I'll go over price action and then collect multiple of those trades in my journal so we can study that. But before that, I need to go over what is this AI component used everywhere that will help us in our trading. Well, it's called feature engineering. This slide is taken from my course where I go over that, but feature engineering is the process of using domain knowledge to select, transform, and create features from raw data to improve the performance of a machine learning model. So I know it's very technical, but to be very specific, in other words, we use features to describe the attributes of a raw data. So let's just look at this example right there. It's very important and this can make a huge difference in your trading. So for this specific trade, here are some features. One feature could be the day of the week. And in this case, it was a Tuesday. Another feature could be that it was a long. So we went and then we took a buy. A third feature could be something as simple as the time we took this trade. So this was taken at 9:50 a.m. And there are millions of those features in our trading. If you have the skill to do that, you can take any component of a trade and then transform it into objective features you can then study in your journal. So the feature I wanted to share with you today is one that a lot of people have problems with. Even JadeCap talked about it in his video, and it is the time frame. The time frame we should be using for this strategy. A lot of people never know which time frame to use. A higher time frame, like the 15 minute, because this is why JadeCap talked about using either the 15 minute or the 5 minute. A higher time frame like the 15 minute could give more confidence in the trade compared to a 5 minute. That's true. However, the 5 minute could offer more opportunities and potentially more returns. So which one between the two should you be using? Well, there's only one true way to know which one is best, and it's by using data science. So I will go over the last week and journal all of the trades I could find for this strategy and then compare between the 15 minutes and the 5 minute which one would give the best return. Because, for example, in this example we just covered, we saw that we had the fair value gap on the 5 minute and then also the breakout structure right there. However, let's say someone was waiting on the 15 minutes to take the trade. Let's just see how it would look like. The 15 minute right there. We also had the fair value gap, that's true. And then we also had the breakout structure. So if someone was using the 15 minute, first of all, the order would be set right there and the stop loss below this low. So you can see that the risk to reward is very different from the 5 minute because as we said, we need a 1 to 2. And for the two targets we had for this trade, we couldn't even get the 1 to 2. So I could maybe use, for instance, the yesterday's high. That's something he also covered in his strategy. And let's just see what the target would be at the yesterday's high. Yeah, something closer to 2, but even there, we don't even get it. But let's just see if we're getting actually an entry there. No entry yet. And then at this point, it's 12 p.m. It's lunchtime, so we would need to cancel the trade. So you see that if someone was waiting on the 15 minute, he would have missed this trade. And then on the 5 minute, we had a beautiful reaction to our trade. So let me just gather some data and then I'll come back to you with the answer. So to do this exercise, the best thing you can use is a professional trading journal, but it costs hundreds every year. So I can understand if people don't want to make the investment right now. You can also use an Excel sheet, but the analysis is a little bit more complicated in it. So for my community, what I did is that I created this Notion template, which I personally think is the best one out there because it allows for the data science side when analyzing our data. And I'll show you exactly what I mean by that. All the other Notion templates I used in the past were just giving me the date, the weekday, or even the time of the execution. But this is just basic stuff. I wanted more detail as a data scientist. So to come back to this strategy, I was able to find 4 trades. So we backtested together Monday and Tuesday. We saw that Monday we had a canceled trade and Tuesday we had a winning trade. Then Wednesday, what happened, I got a losing trade, and Thursday and Friday, I got 2 good trades. So those results are quite good, to be honest. But remember that this is only 1 week of trading and 1 week of data. You need much more before trusting a strategy. But let's just go over what I did. So as I said, today we'll just be focusing on the 15 and the 5-minute execution. So to do that, I separated the breakout structure and the fair value gap. Because sometimes you can get a 15-minute breakout structure, but then decide to enter on the 5-minute fair value gap. So that's why I decided to separate those two. And then those are all the other features we're also studying in our community and many more. So to study the difference between the 5-minute and the 15-minute, I'll just go into the feature analysis part and then look at the data right there. So for the fair value gap, we saw that we had 4 trades that had the fair value gap on the 5-minute, and we got a 75% win rate. And this gives us a return of 5R because I was taking profit at a 1 to 2 every time. But on the 15-minute, we had only 2 trades which worked on the 15-minute, but this gives us a win rate of 100% with a return of 4R. So we saw that we had a higher win rate but less return. And this is only for 1 week of data. So you can understand that as you're gathering more data, you can see this kind of pattern. You might get less trade, but higher win rate. But if you prefer having a higher frequency of trading and a slightly lower win rate for more return, then you can decide to go with the 5-minute. But this doesn't stop there because with this journal, I can also study how far in profit I went with this trade. So we can see that for those 4 trades on the 5-minute, price eventually also went to a 2.5R. So I could take profit at a 2.5 instead of a 2R. So just by going with a 2.5 instead of a 2R, I could get 2 more R for these results. I also studied if it went to a 3R, and this only happened 50% of the time. So for the results, you can see that if I was only using the 5-minute and then going always for a 2.5, I could go from a 5R to a 6.5R. But if I was using the 15-minute, I could go from a 4R to a 5R. And if you're greedy and you're looking to get that 5R, 10R, you can see this is the type of results you would get because price would go in profit and then return right away. So this is a small experiment I did today. And then I'll do more of those in the coming weeks. But all of this is kind of useless if you don't have a good risk management strategy. If you want to have a script that I wrote for this specific purpose, then you should definitely check out this video I made, which includes a free script you can use in your own data. All right, see you there.